Welcome back, ladies and gentlemen, to day two of the FinCom Summit 2022 by CXO Global Forum. We are honored and privileged to be joined with a very esteemed panel for our last discussion of the day. But trust me, we save the best for the last. This is going to be the last session of day two, and it's going to be a panel discussion on the emergence of digital wallets, moderated by Mr. Faraz Javed, who's the CIO, NayaPay. Faraz, over to you. The floor is yours.
Thank you. Assalamu alaikum, everyone. I hope everyone is doing well. So our today's session is on a very interesting topic, that is emergence of digital wallets. We have been hearing a lot about digital wallets for last couple of years. And I feel that it's high time that now we focus on its penetration and getting the true adoption and getting it into the market. So today I have distinguished guests from the payments and digital lending industries. And I'm sure that today's session will be very interesting and fruitful for our audience. So I would like my panelists to give us a brief introduction about themselves and their background. So I'll start with Naureen, if you can just introduce yourself.
Thank you so much, Faraz. It's a pleasure to be amongst all of you today. I am a co-founder and CEO at Tezz Financial Services. Tezz is an NBFC that has been in the space of digital nano lending since 2018. And we have been focusing on lending based on credit scoring that's based on smartphone data and other transaction data. And I think what we've actually been focusing on over these years is just making the journey seamless for the customers and primarily trying to create credit histories for the and the underbanked masses. So that's been Tezz, and now the plan really is to transition towards additional lending products and go towards maybe a lending super app that we're working on towards now. So that's a little about us.
That's nice. So Faisal, over to you.
Yes, assalamu alaikum, everyone. I'm Faisal. I'm the head of payments infrastructure at Karandaaz. Karandaaz, for those who do not know, it's a special purpose vehicle being funded by our two donors, the FCTO and the Bill and Melinda Gates Foundation. So we are working on the infrastructure projects, developing the private sector, developing some of the fintechs, helping them, and doing some experiments in the industry to figure out what to do and what not to do at the later stages. I'm heading the infrastructure part. So the most important area for me was the thinking and deployment of Rast. So it just went live about a week ago. The Prime Minister inaugurated it. That's it. Before this, prior to joining Karandaaz, which was in 2017, I was with National Bank. I was the head of their technology and e-banking for the Islamic portion. Prior to that, I was heading the PMO and the core banking deployment over there. I've also worked with partners, SunGuard, AMZ, UBL, MCB, and those earlier in my career. That's it. Thank you.
Okay, so we have someone from the tech background also.
Yeah, I'm a technologist by profession. Yeah.
Okay, Madiha, can you just introduce? Yeah, can you introduce yourself?
Absolutely. Thank you, Faraz, and thank you for having me. I serve as a VP Careem Pay. Careem, as part of our super app ambitions, we also have significant fintech ambitions. We're just getting started building our products, preparing to launch. But I've been with Careem for sort of 3+ years, launching some of our other businesses across food, deliveries in other markets, the super app, etc. And I've been working on the launch of Careem Pay for about a year now. I'm happy to talk more about what products we're working on. But prior to that, my experience has been in corporate strategy teams at banks, and prior to that in management consulting.
Okay, great. Thank you. Thanks a lot. So, so now we'll formally start our session. So, Naureen, like we have been hearing about digital wallets a lot. So how do you see the role of digital wallets in the financial inclusion? We are hearing a lot about financial inclusion by state bank, but how do you see the role of, like, is it actually happening, or it is just talks?
Digital wallets really started in Pakistan with the advent of branches banking, about 2 decades back, when Easy Paisa and then UBI Omni stepped into the space. So it would be incorrect to say that digital wallets are now happening. I think they've been happening since a while, but I think now is the time when the environment is becoming a little more enabling to reside on the railroads that had been set on earlier by these bigger players. And now we have newer players who are coming on, bringing in new use cases to reside on those wallets. Now, I think definitely all around the world, digital wallets have actually played a very integral role in democratizing payments, bringing in and underbanked into this financial mainstream. And I believe, when you talk about financial inclusion in digital wallets, what they really do is bring in 3 core integral elements. For me, the first one is access, which actually pans out to scale. Then you talk about efficiency, which actually resides on the pillars of speed and affordability. And then customization, which is yet to happen, which is to match the needs of the masses. I think digital wallets can be utilized to a very, they can be used to a very strong level if used correctly. But also, I think, COVID actually brought in a very, very monumental shift, as we all know, overnight behavior change. And I think when you talk about digital wallets, it's not only about having a payment rail there. You need to actually bring in use cases that prompt or promote the use of those wallets. And I think one of a great synopsis would actually, I'd like to borrow from India, where Jio, the partnership with Jio and Facebook has actually proven to be very successful already. It happened last year, and you saw actually Jio, bringing in digital connectivity. You saw WhatsApp, bringing in digital activity and interoperability, and ultimately JioMart, which actually provided the rails for retail, online and offline. I think digital wallets actually have a very, very huge potential, and we're just beginning to actually use them. I don't have to repeat the numbers, the Pakistan fundamentals, talking about the population. We talk about mobile wallet penetration right now. We have about 41 million active mobile wallets. Well, you have 72, but about 53% of them are actually active. And that too, probably most of them are 30-day active. Well, they said we have 40 million bank accounts. I'm not sure what that number really includes, whether it's also inactive accounts. But I think digital wallets can actually bring this trajectory where you can actually start pushing towards bringing in those people who otherwise would not be included in the mainstream. And I think these are things that we all are already aware of. But I think now is the time where we start shifting the conversation, from connectivity to value creation and bringing in platformication as an element for these wallets.
Yeah, that's really important. So, Madiha, you have been working with Careem UAE. So can you please, taking this forward, can you please share your experience related to digital wallets in that market, and how you are planning, how Careem Pay is planning to introduce digital wallets in Pakistan? What are your plans if we talk about super app? So we want to hear this from your side.
Yeah, I think Faraz, to take your first question first, interestingly, I think Pakistan is further ahead than the UAE in the digital wallet space. As Naureen mentioned, this is not a new concept in Pakistan. In the UAE, perhaps because it's been a heavily banked market, historically, digital wallets have not been something that have been focused on and have not been sort of taken off, because the focus has been on card-based payments and sort of bank-based sort of transactions. And actually, the existing wallets have basically been launched by banks in UAE, not by fintechs to the same extent. A couple of reasons for that. I think the regulations are still, I think the fintechs are still applying for the requisite licensing that they would need to be able to launch digital wallets in the UAE. So that disruption is actually yet to happen. So in this particular sense, I think Pakistan has leapfrogged some of the more banked markets in the region, right? And then in terms of coming to your point around Careem Pay's plans, Yes, we very much plan to launch a digital wallet, but that is one piece of the Careem Pay strategy. Look, for us, payments is tied to the overall super app strategy, right? And which we've sort of launched formally in the UAE and in some cities in KSA, but will be rolled out in the region because we've seen actually hugely positive. What I mean by super app is if you open the Careem app in UAE, you'll see probably about 11 services, right? And across ride hailing, food, groceries, home cleaning, other services, etc. And then we also have payments use cases such as a P2P pilot, bill payments use cases, etc. And so the purpose of sort of Careem Pay from a consumer use case angle is to really drive user engagement on the super app. Payments can be a glue that really brings a super app together. And the payments use cases can add further user engagement and further transactions on our super app. So that's the consumer side of the business. And we plan to complement it with also payments use cases for our captains, as well as for merchants. So then we have the whole consumer and merchant flywheel coming together. So that's our high level strategy on why a wallet. The wallet will be the basis on which we will launch additional payments use cases for consumers and merchants. Now in the UAE, we do have a pilot live of the P2P of our P2P product, and we have bill payments live as well. For example, postpaid mobile bill payments. And what we've seen, I think the learnings we would bring to Pakistan when we have the requisite licensing or partnerships in place to launch the wallet in Pakistan is one, simplicity. So users have really, really responded well to a very, very super simple P2P experience that literally takes sort of 2 clicks. And I think with Rask becoming available in Pakistan, actually that's probably, you know, as simple an experience as possible is what fintechs in the space should be. Simplicity has really resonated well with users. You're already logged into your Careem app. Yes, we have some security controls in place. For example, if someone is triggering certain fraud rules, we will issue an OTP, but we won't do it for every single transaction all the time, such as a bank app might, right? So we're being a bit smarter about the hoops that we make the consumer run through, right? And then, of course, our KYC, which we're launching soon, will be fully digital, will be instantaneous unless you're flagged, etc. So I think simplicity of use is really the key. Another thing we've noticed with our bill payments product is, you know, we have your phone number as a Careem user. We're able to pull your bills for you that are associated with that phone number and able to issue you reminders such that you don't even have to remember to pay your bill. You can easily add your friends and family's bills as well. So really, it's ease of use. That's our guiding principle, and that's what we would bring to Pakistan as well as soon as we are have the approvals to launch our wallet there.
Yeah. So, Faisal, our participants have talked about digital wallets. So, how Rast is different from digital wallets? Can you put some insight? Give us some insight about Rast, how it works, and how it's different with the P2P of digital wallets.
Okay. So digital wallets, we all know what wallets are. Rast it's not an account. It's basically the rails and roads for transactions. It's basically an infrastructure which will enable transfer from one account to another. So what's new in Rast? That's a question I keep being asked by a lot of people. I'll just explain what Rast is, and then you'll automatically understand how is it different from the digital wallets. So Rast is an infrastructure which makes sure that the transaction, account-to-account transaction, is fast and immediate. It might not have an impact on the P2P transactions right now, but for the merchant transactions, yes, it feels good for the merchant to have the funds right then and there in his account. That is one feature of Rast. It's interoperable. So unlike a lot of closed loop systems, every entity that's registered or that's licensed with State Bank for digital transactions will be connected to Rast. So irrespective, you don't need to make direct connections with any of the banks. You just need to connect to one entity, and it will make sure that your transaction is enabled to any other licensed entity in the Pakistan fintech world. then it's supposed to be simple. It's basically based on the level 1 principles. So simple would mean that this is an alias-based transaction. Right now, the mobile number is taken as the alias, but in future, it could be an alphanumeric thing. We are in fact working on that. We might just let you decide your own user ID. So rather than entering the 24-digit IBAN or huge account numbers, you just need to know the alias of that specific person or that entity to transfer payments into the account. So it's very simple. You just need to make payment to a number. Secure,
it
obviously.
Will also allow a lot of scalability, because right now, if there is a number associated with NayaPay or with HBL, if I make a RAS ID on a cell phone number in HBL, I won't be able to use the same cell phone number in NayaPay. This is my understanding, and I keep getting these questions.
Okay. So I'm a consumer. It's my right to decide what alias I use. Okay. Let's say I'm using an HBL account, and tomorrow I see that there's more benefit in getting a NayaPay account, and that it has more user edit features for me. So what I'll do is I'll de-link my HBL account from the ID or UBL account or any bank's account and relink it to the account of NayaPay. So this is an option which I have. At the moment, it's against one person can register one mobile number to one account. But going forward, we'll have features for advanced users as well. For instance, I have bank accounts in 6-7 banks. All the banks that I've worked with, I've had accounts of everywhere. So what will happen is I can link multiple accounts to my ID. I'll set a default account, and then being an advanced user, I'll also have the feature to write down that all my inward remittances come in account A, my salary comes in account B, my bills payment is done from account C, my other transfers, investments are gone from account D. So I can do that myself. At the same time, I can have multiple aliases as well. I mean, I can give you my mobile number 0123456789, for example, and you can send funds to me, and then I can request Naureen or Madiha if they want to send me funds. I'll just probably ask them to send you to Faisal Mahmood. I can have multiple aliases, just like I can have multiple email addresses. So it is totally in my control as a consumer. I will control what alias goes with what account, right? Then there's another feature which is the low cost. In fact, it's zero cost. There's no cost to the sender. There's no cost to the bank, the participant fintech, whichever is connected to RAS. So it will be absolutely free of cost. We are working on a way to manage the dynamics. How are we going to run the operations for it? But yes, there is a way. For now, this is going to be free for the participants and for the consumer. Next is accessible. Just like you said, scalability. So irrespective how much load we get on it, we can scale it to the maximum possible number that we have forecasted in next 15 years in Pakistan. There's plus it's also interoperable, like I mentioned earlier. So it will connect everyone, and it's open for everyone to come and connect. There's no restriction on it. As long as you are a licensed entity with State Bank under any of the licenses, you are welcome to come and join it. And then the last USP of this is it's innovative. Going forward, so I think State Bank has already started announcing it. If no, they will start doing it very soon. We are moving towards the framework of open banking. That will make available a level playing field for the banks along with the fintechs. Sorry, it's the other way around. So level playing field for the fintechs with the banks. So that is something where innovation will come in. So the banks only have accounts, and then how to use the account, I as a consumer can authorize any fintech. Let's say Tezz Financials, I can authorize them that they have the authority, or Careem has the authority to go and fetch my transaction details from my bank. That will enable them to probably use data science, give me more possible products and things like those. So these are some of the features. One more feature, two, three more important things that Rust has is it's based on ISO 20022. So this is a message format that's a standard payments message format. Even for the PSD2 compliance, you need to send messages on this. With this message format, you have a lot of other space for additional data in a transaction.
Yeah.
For instance, what kind of a transaction I'm making right now, it's just that account A, this person making this much debit to account B, and that's it. But with this ISO 20022 format, we have the option of adding in additional data. Transaction was made, what was bought, what time of the day was it used, how was it bought, was it through a credit card, and all those things.
This means that it's highly scalable, and with time we'll explore more of, we'll get to know more of its features. So yeah, you're absolutely right. So taking this forward, I want to ask Naureen that like we have discussed, that we have been the emergence of digital wallet has been for last 7-8 years, use it through EasyPesa or Jazz Cash, but still we don't see the adoption of digital wallets. It's mainly it started with the CNIC to CNIC transfer, but still there are digital wallets, but they are not actively used. So what challenges do you see that people have not started using digital wallets actively?
I think this is something that we all talk about every now and then. We're living it every now and then. And I think the question more so is, what is the holy grail of digital adoption at scale, rather than just only digital wallets? And I think for me, they're technically, well, you can sum it up into 4 things. One would actually be the customer journey. I'll come to each one of them separately. The other one would be the opportunity cost of digital versus cash. Then, of course, it's the low number of digital payments touch points when you talk about merchants, for example. And of course, I'd say still lack of use cases. So 4 for me. And when you talk about customer journeys, I think the timeliness factor is crucial. When you talk about downloading the app, you talk about the registration process, and of course the entire KYC. That's when the impediments start kicking in for the customer. And I think this is where an opportunity presents itself to bring in pre-level accounts, level 0 accounts, which probably only require you to ask for an MSIDN and a CNIC number, and your account is actually created with limited mandates, for example, or limited limits. But that's something that we need to start doing right away, so that you can actually at least encourage people to create wallets, and then I think the next level of verification can start happening. I think this is actually very much also linked to one of the other points that I stated, which is the low number of digital payment acceptance points. We've actually seen merchant acquiring is a very expensive, it's a tiresome business. And in Pakistan, we still have a very low number of merchant acceptance points, barely 50,000 POS terminals right now. Or, for a population over 220 million, that's hardly anything. So I think that's something that has to be worked upon. We do see the State Bank has come up with, recently the merchant onboarding regulations. But that, that too comes with certain, gaps. And merchant onboarding is still a very difficult process. And unless that challenge is addressed, you will not be able to see merchant acquiring propelled to a stage where we want it to. Then I'd like to come on to the opportunity cost. Everyone talks about the fact, I think we all know, for an overall economy, digital is the way to go. But for an average individual, digital is still more expensive than cash. You talk about even things like, the commute to an agent. You talk about cash in, cash out, that's added costs. 2.52% are actually costs of cash in. So, challenges like these are still discouraging individuals from actually engaging in digital transactions. We've actually seen very often, you go to retail outlets over here and they tell you, yeah, you just pay by cash. आप digital से pay करेंगे, you'll have to pay 12% extra. That's actually, again, the element of tax kicks in. So we are actually looking at these instances on a day-to-day basis. We've seen Punjab bringing in some, trying to bring in some changes with the tax regime on sales tax, but you hardly see it being implemented on a mass scale. And of course, I think all of us have talked about this time and again. Madiha mentioned it also, is use cases. See, I think payments alone will not drive adoption of digital at scale. You will need use cases that actually are a part of the day-to-day lives of individuals. And those use cases are still missing. And it's not only the use case, the journeys are just arduous, Unfortunately, with the biggest of banks also now bringing in digital apps, unfortunately, and I'm going to say it very bluntly, I'm not going to name those banks, but those journeys are not serving any purpose. The point is not just to create a wallet and be happy about having a digital wallet, under your umbrella. There's much more that needs to be done to get people on board.
Yeah, absolutely. So, Madiha, as Naureen said, that right now the challenge is with merchant acquiring, especially in the space of SME. There is a huge potential in Pakistan in the SME market, and SMEs are struggling to get hold of their bank accounts, get themselves digitally enabled. So how do you see the emergence of digital wallet or the emergence of fintechs can help in getting them digitized and enable them for the digital payments?
Absolutely. And the reason this is so critical for us is obviously not only to enable SMEs to generate an income and easily start generating an income, but also for a consumer wallet to take off and for a consumer wallet to be attractive at all for a consumer. That wallet has to be usable to be able to buy goods and services, right? If it can't be used broadly, it's not of much use, right? So for at least from the perspective of a player like Careem Play, where we want to play on both the quote unquote issuing and acceptance sides, that flywheel is super critical to our ambitions, right? But to get back to your question, digital wallets, yes, they can be relevant for a certain segment of merchants, right? So again, let me share our experience from UAE, for example. So like I said, we built a pilot of a P2P product, and that it lends itself so beautifully to P2M, right? Especially when you're considering, for example, social media merchants or small merchants that may not even have set up yet their entity. They're not doing a large volume business, and they're looking for sort of generating demand through multiple channels. They may not have their own website, they may not have their own app, but they're selling on WhatsApp, they're selling on Instagram, etc. Right? And a couple of the features that we built as part of our P2P product on the Careem app, and again in the UAE, is as a user, as a consumer, you can copy your personal payment link from the Careem app and send it to anyone. You can copy your QR or print out your QR or share your QR. Anyone can scan it. And these features are so easily usable for a merchant as well, and so relevant for merchants of that size. Now, there are a couple of challenges, and probably the most important one being, as Naureen mentioned, merchant onboarding. Actually officially merchants, right? They're just small individuals trying to start generating an income. And then the minute they become a merchant and they have a bank account, and if they've managed to set up a bank account somewhere, they're incorporated from a tax perspective, then the KYC or KYB burden on the fintech provider becomes quite significant, right? So our P2P experience is so smooth and simple. Again, it uses an alias, as Faisal mentioned, but the minute you're layering on a merchant onboarding or KYB experience onto it, it just delays the amount of time before you can start sending and receiving payments. And B, just the experience becomes onerous. It may not be fully digital then. I mean, ideally it is, but it may not be if there's some back and forth required. So yes, I think digital wallets can be very useful for a certain segment of merchants and the different form factors or payment methods that can be linked to that wallet. But I think merchant onboarding does remain a challenge, especially at scale. One other benefit, though, I would add of digital wallets is to the extent that these are on quote unquote on us transactions, where, for example, if it's a Careem Pay wallet and it's a Careem Pay consumer transferring money to a Careem Pay merchant wallet, obviously we have a saving in terms of interchange and payment processing costs, and we can share some of that savings with that consumer, with that merchant. So while we may need to start monetizing our service with merchants, we'd probably be able to charge them a lower rate than they can get for, at least for card-based payments, for example. So there are benefits to be passed on. And I think that digital wallets, especially mobile-based digital wallets, can be super helpful for a certain segment of merchants. But I do think merchant onboarding remains a challenge in most of the markets that we operate in.
Yeah. So to address this challenge, State Bank has come up with a regulation of onboarding an unregistered merchant. And in that onboarding process, they just want your CNIC and they onboard you as, but that's the extended version of a consumer onboarding, because you have more limits. If you get yourself biometrically verified, you get extra limits, extended limits. So they have come up with the regulation to help fintechs to onboard merchants quickly. But we have challenges like we need more automation on the Nadra side to ensure that there should be a quick KYC. So you're absolutely right. We have some challenges. We have to overcome those challenges in order to streamline the merchant acquiring process and quick onboarding process, in fact. Yeah, thank you.
And I think what you mentioned in terms of the State Bank, sorry, Faraz, I cut you off, it's actually more progressive than some of the other markets in the region in terms of this particular regulation. It doesn't necessarily exist elsewhere in the broadly MENA Pakistan region. So it's relatively progressive, actually.
Yeah, absolutely. So, Faisal, I had a query while I was preparing for this session, that we have Asan accounts, and banks are banking on Asan accounts. We are seeing a lot of fintech type apps being published by banks, and they are conveying this, that they'll do the quick onboarding using Asan account. On the other side, EMIs are there. PSPs don't have to open a wallet account, but EMIs are there, and they have to open digital wallet accounts of their customers. So how do you see they both compete, and what are the main differences that will help either banks or EMIs to prevail and to capture market?
Okay, so I'll start with two things. Normally, there's a misconception that a wallet is also an account. There's no difference between those. So to go to Wallet 101, we need to understand that a wallet is just an account which is open digitally. It's open digitally. 1. 2, it has account limits, right? So a normal account has to be opened in a bank doing the physical paperwork, and it does not have any upper limits in the account. Now, Asan account, we as of today have 3 different types of Asan accounts. There's a Asan mobile account, which is an account in the branchless banking through the third-party service providers. It's the AMA. It's only open through a USSD channel. That's it. You don't have any other channel to open it. Then there's a Asan account, a standard Asan account, which is opened in a branch. You have to go there physically. That's not a wallet, right? That's a physical account which has an upper cap of, I think, 500,000 or something like that. But that has all the paperwork and everything. The only benefit is it has no fees and nothing. Then there's a third Asan digital account, which is the regulations we were discussing about earlier. My fellow panelists also referred to it. That account is basically you can do a remote onboarding through the Nadra, and then a self-declaration of your documents or whatever, and you get an account remotely. So that is one account which is opened in the banks only, right? With the wallets coming in, the fintechs also have parallel account. yes, it is going to be a competition, but then it comes to the customer services. Who offers better customer services? So the fintechs, EMIs, they have better customer services. Obviously, as a consumer, it's my choice which account do I go for, right? So the only account which is relative to this one is the Asan digital account. But again, fintechs obviously have better services, so people would probably choose to go to these accounts then.
So it depends on the time will tell whether customer will go for Asan accounts or digital wallet, depending on the use cases offered by
Exactly.
Or
exactly.
Yeah, you're absolutely right. So talking about the use cases, Naureen, do you like your company is in the digital lending space. So do you think is it a good use case for a consumer or for a merchant to have a wallet account and then get digitally lended and then start paying back using digital services? So how do you see these both entities gelling up?
Yeah, see, I think both digital wallets and digital lending, they're codependent. While digital wallets provide the rails for payments and for lending, lending provides the fuel on which, the machinery that actually resides on those wallets will propel. I believe truly that digital lending will be the biggest use case for digital wallets in the next 5 years. We already see, that trajectory happening in lending on various fronts. So I think digital lending definitely is going to be one of the biggest use case. But I think, and these are some numbers that I borrowed from, the Branches Banking newsletter. It's interesting to see that when you talk about, lending related transactions on Branches Banking rails, about 80% of the transactions are still happening over the counter. Now that's interesting versus mobile wallets because you see actually a potential of about 15 to 20 billion rupees on a quarterly basis that are actually being transacted on lending on the Branches Banking rails. Now imagine this actually coming on to digital wallets, the trajectory that wallets can actually gain via digital lending. The other issue that I actually that actually exists is this again, the gap that resides on the cash in, the costs of cash in. Now, if innovations can actually come in to encourage people to actually pay, via wallets, repayments and board disbursements will actually be encouraged via digital wallets. But the costs are so high. We've actually seen it, amongst ourselves also, that there is, depending on the use case, depending on the payment provider, it's between a 1 to 2.5% charge that is charged on recoveries or disbursement, either leg of the digital lending journey. But I think if there is a reduction, in costs or enhancement in limits, this can actually really propel digital wallet use cases. Another thing I believe, and we actually use it, is the data that can actually be used on the digital wallets for digital lending. So, while digital lending, we use smartphone data, there are the transaction data, but mobile wallet data can be a very rich source of financial transaction data that can actually help us, do our credit scoring and analysis. And this will not only help in digital lending, but will also help in, providing other customized services for, the masses by really analyzing their payment journeys, their payment histories. And of course, then you're able to create those credit histories, and you can actually then move from just payments to a more enriching financial enrichment or financial empowerment journey. And I think a lot of us might have actually studied this report of McKinsey, which actually says that the potential for digital credit in Pakistan is mammoth. By 2025, it's anticipated that about $23 billion worth of digital lending will be happening on these rails. So I think it goes without saying, and we also know every company, every fintech at the end of the day every company will actually become a fintech at the end of the day. And most of them will get into digital lending. we see, most of these companies who are on the retail side as well coming towards the digital lending side. So I think it's a no-brainer. The symbiosis is too tight to, to be ignored.
Yeah. So, Madiha, right now, like if we look at the SMEs, one part is enabling them on their retail stores, and the other side is the people who are working from home, who has businesses from home, and they are selling on Facebook. They don't have any digital presence or online presence. So, how do you see that enablement of those merchants, their online enablement of the online presence of those merchants, coupled with the digital wallets? How do you see this use case taking off and helping merchants for the digital payments?
Yeah, I think for us, there are two or three ways in which sort of digital wallets and sort of form factors around those digital wallets can support the types of merchants you're talking about. But I think in order for e-commerce to really take off, we can't do it on the back of that strategy alone, right? To Pakistan, and I'll get to that in a second. But to the extent that wallets can support, yes, one, they can support merchants that are not using web-based or app-based channels, right, where they don't have an online storefront. And if they're selling on WhatsApp or Facebook or Instagram, definitely yes, digital wallets and payment links and QR codes built on top of those wallets can definitely help, right? The other thing they can do is they can also support payment at delivery, right? So for smaller merchants that don't have the ability or the resources to handle cash on delivery or don't want to take on the hassle of cash on delivery, there are wallet-based payment types that can be used at delivery, right? So for example, we are looking into how we have Careem delivery captains, right, that deliver food delivery, grocery deliveries. We also have a last mile logistics business that other e-commerce companies use, and each of those delivery persons carries already a smartphone with a Careem app already installed on it, on which they receive those orders, right, or those deliveries. And so all one has to do is turn that into a payment acceptance terminal, right, and then you're accepting money into the wallet, into the captain's wallet or into that merchant's wallet, and sort of removing cash on delivery. Of course, that is dependent, as Naureen mentioned, on cash in to begin with, right? But if that problem is solved on the consumer side, then payment at delivery definitely, I think, could be useful for these long tail of merchants. And then the other way it could support them is to the extent that players will be launching digital wallets, it will be a competitive game and they will be having to incentivize customers, right? And that could also boost e-commerce. So for example, once Careem Pay is on both the, let's call it issuing and acceptance sides, we may need to incentivize customers to top up their wallets, to fund in their wallets. It might even be, for example, part of the Careem Plus subscription program that we've rolled out in certain markets and plan to roll out in others, right? And so that if there is a sort of a competition heating up between digital wallets, I think that will also could also benefit merchants as well. And potentially we may need to also incentivize merchants to start using those wallets, right? But I think with all of that said, to really change the game of e-commerce in Pakistan, or the face of e-commerce or the trajectory of e-commerce, it's not just wallets. I think we'll have to improve online checkout experiences, right? Both web-based and app-based for the slightly larger size of merchant that actually wants to formally generate demand through an e-commerce platform or through a website or through an app. And those super smooth, super easy checkout experiences, which are actually super reliable for the merchant and improve conversion for the merchant, but they're also super easy for the customer to use, where they're not entering their card details every single time, they're not logging in every single time, they're not entering their delivery address every single time. There's a lot of that if you're, for fintechs that are sitting on both the consumer and merchant sides, that you can really sort of ease that process. So I think to really change e-commerce from a payments perspective, we'd have to tackle both the wallet, but also the sort of checkout products that are available.
Yeah, absolutely. Yeah. So, Faisal, I've heard that RAS is coming up with their own QR, consumer and merchant-based QR. So, how do you see these QRs will help in digital payments, and are there only static QRs or dynamic QRs? So just shed some light on this.
Okay, so one of the problems we have had historically with the QRs was everyone had their own QR scheme. So master had their own QR, and every time I went to a retail outlet, there were 3 different QRs displayed. I would just swiggle between different apps and scan different QRs. So that's all credit to State Bank for doing this. So we have a standard EMV Go standard QR available now. I think it's out there in the market already. It's already given. So based on that, there's just going to be a single QR. I don't have need to use different apps. Now, there's another use case right now. It's a P2P for account payments. This simple account payments is going to address most of the issues that Madiha just referred to right now. E-commerce payments online then and there, because they're connected to all are interconnected. Now for the QR, let's say like an alias, if I have my own QR, my standard QR, and I can switch accounts behind that QR. It's a QR for my alias, right? Now that QR is with me on my visiting card, on my shop, placed there. I don't have to change the QR when I change the bank account. The customer comes and just scans the QR and boom, the payment's done. Now, we are also considering one area where I think the smartphone penetration is about 70%, and there's still about 30% phones which are simple feature phones. They don't have a camera. How do they use it? So, process of developing a use case for request to pay. It's also the merchant payment. That is where a payment request is initiated by the merchant himself or herself. The request comes, the merchant is going to scan the QR that is available to me, my account's QR. And in response, I'll just say, yes, please make the payment, and the payment's done. Now, we are focusing on a simple account-to-account transfer. With this account-to-account transfer, QR is just a channel, could be initiated by anyone. So every shop becomes a self-acquiring merchant. Every shop, every merchant is a self-acquirer. They just need a QR for the...
Yeah. So they have to be associated with some financial institution and generate their own QR, map it with a wallet?
Exactly. Any financial institution, any fintech, any EMI, you just need one wallet. And your wallet will have a standard QR, and you are connected to all the banking industry there.
Okay, fine. Yeah, got it. So, okay. So, Naureen, we have just seen another regulation from State Bank, digital banking, and now everyone is running after becoming a digital bank. And I'm not sure what EMI will do after digital bank, because now EMIs have started looking at the digital bank, because EMIs will get wallets with no limits or with extended limits. Here we have some restrictions on limits. So how do you see will it impact the penetration of EMIs, or everyone will become a digital bank instead of EMI?
EMI, and I respect the EMIs out there, but honestly, being very blunt, I really I don't understand the value of EMIs right now. I think particularly with RAS coming in, I think it's going to be very difficult for the EMIs to be relevant, and with the digital banking regulations as well. I think EMI, I think the good thing with the digital banking regulation, which is an amazing step by the State Bank, it's not going to be an easy one to live up to. We see with most of us must have seen the regulations already. The requirements are just like a regular bank. A lot of them actually linked to the traditional prudential regulations for banks. Now, of course, EMIs have the option to transform into a digital bank, a digital retail bank, provided they meet certain conditions. But at the end of the day, I think an EMI will always need a bank even to accept, any kind of funds, whether it's deposit or credit. They can't do it on their own. So I think it's merely, holding value. And I think at the end of the day, I think well, right now what we understand is there are about 100 digital banking applications already with the State Bank. 5 or 6 will actually get the license. This is going to be very interesting. But I think it's unfair to say that the digital banking regulations alone will auto drive financial inclusion, or will auto drive the success or the outreach or penetration of an EMI or any other entity. The digital banking regulations are merely a step to provide an enabling environment. I think they provide the rails. What kind of a vehicle you create and how actually you drive that vehicle is only up to you. Digital banking regulations will not steer it for you. And I think if you are really any entity who's actually stepping into it, there are various elements to it. Digital wallets, of course, will provide the payments rail, but that's not what digital banking is going to be all about. I think it's going to be it will require an optimal marriage of traditional banking and the new age digital banking, where elements such as risk management and deposit mobilization will require the heavy weights and the mindset of maybe traditional banking, and new product innovations, be it credit, be it savings, they will require your new age product mindsets that come from the fintech and the EMI side. So I think this will require a lot of metal from anyone who actually steps into digital banking. It's not just getting a digital banking license. It's not just about bringing in high valuations with large sums of money. If you are ready to succeed, it will require a lot of metal. It will require proper strategy. It will require the proper kind of products. Deposit mobilization, as it is, it's not an easy task. And then, of course, identifying who to lend to, which segments to lend to, how to create a diversified risk regime. All of that will matter here. So yeah, I think there's much more to digital banking than just creating a digital wallet. And yeah, I think we all are just getting very excited about it. And it is the future of Pakistan. It is the future of banking in Pakistan.
Yeah, you're right. So one more challenge that we are seeing right now are foreign remittances, especially in the case of freelancers. They face a lot of issues in getting a wallet, an account, a bank account, or a wallet account. Now with the emergence of fintechs, they can create their wallet accounts instantly. But still they are facing challenges in getting foreign remittances in the digital wallet. So do you think, Madiha, that this can be another use case for a young generation where fintechs will be targeting, and they can help them in getting those free remittances in their digital wallets in a quick way, so that they can make use of it digitally?
Faraz, this is a use case where I think there is room for real disruption and innovation, right? As Naureen mentioned, domestic payments, domestic P2P at least, will probably get disrupted pretty fast. Experiences might start converging from the different players pretty fast, and it might be difficult to develop a unique value proposition or USP for wallet players, especially with the coming of Rust and that experience being eased up. But I think on the cross-border piece, this is where real innovation can take place, and where there is a real pain point that is difficult to address, and therefore not everyone will be able to address it. And that's where really this opportunity comes in, right? Look, there are a couple of, now that's the opportunity. What are the challenges? I think the challenges are not new, they are known. And they're on actually, it's not just about foreign remittances landing in wallet, it's also on the sender side, right? So when and obviously because we, for example, as Careem, have a large user base of both consumers and captains, and a significant brand in both UAE and KSA, which are the second and third remittance markets, sender markets in the world after the US. And a lot of those expats are in Pakistan. This is a super relevant use case for us. But look, the sender has to go through a higher level of KYC. when they're sending cross-border. Also, the AML and other screening requirements are more significant for cross-border remittances. The costs are higher, so either we as the fintech would have to absorb that cost, or we would end up passing it on to the customer, but both the forex cost and the processing cost. And secondly, the limits on wallets also mean that the size limits on wallets also mean that if the remittances are the bulk of your income, then the wallet may or may not be the right place to be receiving that, right? However, if what you are talking about are sort of, I'm a freelancer, I'm selling a good or service, and the person who was buying it happens to be in another country, why should that be an impediment, right? And that probably could be a small enough value that it doesn't violate your wallet limits, or especially if you're a freelancer and you're using sort of a small dollar, your TPV or your average transaction value is pretty low, right? So look, there are a lot of hurdles in the space, but I think that that's where the opportunity is, right? And I think if you can put in place the proper eKYC, the proper automated screening APIs, etc., to at least remove that friction from the process, right? And then what it takes is, in order to reduce the cost, it would be on the fintech player to set up the right integrations and partnerships with the right banks and remittance providers, because you will need those rails. But if you'd have to do them very efficiently and with the right partners, and really negotiate based on volumes to get those rates down to the point where you can actually serve your customers. So I think if those two things can be solved, then yes, at least for smaller businesses, wallets can definitely play a role, right? And also, I would argue that building on the domestic P2P or digital wallet experience, that experience can also be a more user-friendly experience than your international bank transfer, right? Which is an extremely painful and lengthy in time. It's just a process that's way longer than it needs to be. So the disruption opportunity here is very, very obvious. But I think some of the infrastructure pieces in terms of onboarding and costs be cracked by the player that will win this one.
The wallet limits, where they need to be extended for, at least for freelancers or people getting remittance. So you're right. So Faisal, we are almost done with our time slot. So you have last 2 minutes, just if you can sum up the entire session for me.
Okay. Right. So to sum it up, we have figured out that how important are the wallets for our space, our financial space. Financial inclusion, yes, is one of the things that we need to focus on. Right now, it's only about at 25% of our total population. The greater the financial inclusion, the greater is the options of people start using the digital transactions. Now, wallets are one of the important things, because going to a bank, finding a bank, opening an account is quite a hassle for everyone. Even it's only limited to the salaried class, and even for the salaried class, most of the people with in the lower segments are paid salaries in cash. I've had personal experiences. I keep on talking to people, and it's really amazing. Some of the big chains are also paying the janitors and such people in cash. So that is one problem we need to address. But yes, by having the digital wallets and RAS being an enabler, enabling all the inter-account transactions, I think there's a lot of work available out there for the EMIs, digital banks, even the fintechs, because we are also trying to work with State Bank to get the fintechs in the legal space as well, get them some kind of a license as well, smaller kind of a license. But yes, if these things happen, I definitely see the financial inclusion growing from the current levels.
Thank you, Faisal. Thank you, Madiha.
I think it was in 2 minutes.
Yeah, it's exactly in 2 minutes. So you are right on time. It was a great session, and I have learned a lot from all of you. And to sum it up, I feel that having digital wallet, quick onboarding is a good thing to have, but ultimately the success of digital wallets will rely on actual use cases that customer actually need. We don't need have we just need we don't only need the bill payments, but we need to work on different P2P use cases and P2M use cases so that customers start using digital payments for their daily chores. So thank you, everyone. And it was a pleasure e-meeting everyone. Thank you. Thanks a lot. Bye-bye.
Thank you. Thank you, guys.
Thank you. Thank you.
Bye.